Good afternoon, everyone. Today is January 23rd, 2018. U.S. markets just closed. Let's give you a little bit of a recap of what happened today in the U.S. equity markets. My name is Adam Shallett, and this is the AS. This is AS, the Generalist. Our live stream will be from 4 p.m. Eastern to 5 p.m. Eastern, Monday through Friday, for our closing bell special. We want to welcome everyone of our viewers, whether you're new or you followed our podcasts in the past. Thank you for tuning in, and thank you for being a part of our first episode of AS the Generalist. There's many more to come. Please subscribe to our YouTube channel, and we're looking forward to having you part of this big community. Let's talk about the Dow. Where do we close at today? Closing bell rang. The Dow Jones Industrial Index.
Great government.
Closed at $26,216, up 21 points, $21 actually, up $21 from yesterday's close. The S&P 500 closed at 2,842, gaining $6.75 from yesterday's close. And the NASDAQ 100 closed at $6,974.75. One of our trading products that we do tend to talk about most often is the trading product QLD. And for anyone who is not familiar with this trading product, referred to as QLD, well, I'm going to explain it to you right now. QLD tracks the NASDAQ 100 index 2 times. So it's just like buying QQQ in a margined account, but without margin. So if you can't get margin for some reason, or if you want extra leverage, in my opinion, QLD is a great way to trade the market and get good exposure to the NASDAQ 100 index, which is companies like Apple, Microsoft, Google. Those are just to name a few, and they're weighted accordingly. So, when you see Apple pop up, or Amazon, for example, it will affect positively or to the index that tracks it. So QQQ or QLD, they're both good trading products, but let's talk about what happened today in today's trading session, where QLD actually did trade significantly higher, which, in my opinion, rightfully so. So let's pull up a chart of that right now of QLD. QLD closed today at $86.67, which is quite amazing. It was up 1.66% from the previous close on January 23rd. So it's looking very strong. I mean, if you bought this stock and you held on to it for one day, I mean, if you just did an intraday trade using QLD, you could see great gains, in your account during the day. But at the same time, if you're not properly hedged, and if you have too much exposure to QLD on a down day and you're long it, you could definitely see huge losses in your account. That's why I like to use both QLD and QQQ to hedge my position. So I use QLD or to go long the NASDAQ 100, and I use QQQ equity options to hedge that position. So I could take much greater risk while still maintaining a somewhat risk-averse portfolio that's betting on the NASDAQ 100 and on a intraday time frame. So That's very important for me. And I'm going to try to pull up a chart right now and see if you guys can see that. So I'm going to do that right now. If you do want to tune in, if you do want to call in, actually, you could call in at 1-646-584-1207. We are taking calls throughout this broadcast. And we're going to be pulling up a chart right now of QLD. Just bear with me one moment as I pull that up. And today, and also on today's show, we have a few topics about what is going on in the market, what is going on with some investments or the investment companies behind it. And we're going to go all over that today in this 1 hour show. We're going to actually cover a significant amount of content. So let's go to the first thing to check out QLD. It's QLD's chart. You can see closely right here. QLD is trading at right now. Oh, I'm kind of having some difficulty here. I hope you guys can see that. QLD closed today $86.64, as you can see in the chart presented. Sorry for some of the viewers who kind of saw that little mishap there on the screen. But, forecasting, going longer term for the NASDAQ 100, I do see, that, we are going to go higher, mostly due to quantitative issues and, the economic conditions we're right now in. So enough of QLD. You could check that out on your own time. We got some very important events that are happening this week. So let's get right to it, people. We'll talk about the economic calendar of what to expect for this week. Economic calendar is provided by Bloomberg Markets. Get all your up-to-time market data on Bloomberg.com for all of your relevant market data. It may be a little bit expensive, but if you're a professional trader, you cannot skimp on information. Let's go to the economic calendar tomorrow on Wednesday. We have some notable events occurring. The MBA mortgage applications at 7 a.m. Eastern. FHFA house price index will be reporting at 9 a.m. Eastern time. The PMI composite flash will be reporting at 9:45 a.m. Eastern time. Existing home sales will be reporting at 10 a.m. Eastern time. EIA petroleum status report will be reported at 10:30 a.m. Eastern time. The 2-year FRN note auction will be conducted at 11:30 a.m. Eastern time, and the 5-year note auction will be conducted at 1 p.m. Eastern time. And that's for tomorrow at Wednesday, January 24th. So far for today, we're going to be seeing for today at around 6:30 p.m. Eastern time, Charles Evans will be speaking. So that should be quite interesting to see where what he has to say. But according to some of the major financial firms out there, particularly Goldman Sachs, the Goldman Sachs group, they're saying that the U.S. is enjoying the best investing environment in 18 years. Now, this is, again, according to Goldman Sachs Group and their U.S. Financial Conditions Index. Risk appetite so far hasn't looked like this really euphoric since the tech bubble heyday. Now that this financial conditions index is basically a cross-asset gauge of market health signals, and it's the most accommodative investing environment right now in the U.S. market since April 2000, which is kind of spurred by the tumbling dollar and the relentless bull run in equity markets and corporate bonds. It's going to be interesting to see what happens to those negative yielding bonds when the Federal Reserve officials are mulling the impact of inflated asset valuations on consumer prices. And while the International Monetary Fund warned policymakers in Davos to be vigilant about financial risks. So I think 2018 is going to be a great year for the U.S. Markets. I think we're going to be going much higher, and we have a lot of good reasons to see them going higher. We have a lot of good companies, a lot of IPOs coming on. But besides that, we also have some good income plays. You may want to check these out and write these down. A trader yesterday gave me some of these picks, but I chose the top three that really looked attractive to me from hindsight. So the first one is ticker symbol CLM. That's CLM. It gives a 17.76 yield, currently trading at $16.12. This is the Cornerstone Strategic Value Fund, and it gives a great yield at 17.76% with monthly distributions. CLM is something to definitely watch out and maybe to consider putting on your watch list for your income portfolio. Another one is BPT, which is BP Prudhoe Bay Royalty Trust. This actually does pay a significant yield as well at 22.94% yield. Although those distributions are quarterly, it's still a high yield nonetheless. Currently trading at $22.30. BPT is down 2.41% from the previous day's close on January 23rd. But we're in the post market. We're actually seeing BPT up 0.5%, a little bit more than 0.5%. So that's something definitely to keep on your watch list. Is a very high yielding stock, but do your due diligence for these because there could be some risks that obviously there's always risks within investing. Do your homework prior. And the last one that I think is very interesting, mostly because of the significant yield that they give out. The company's name is Frontier Communications Corporation. Ticker symbol FTR. Today it closed at $8.09, which is down 5.16% from the previous close. In post-market hours, it's up 0.12% at $8.10. Now, Frontier Communications offers a 30.89% yield. Now, these yield distributions are made quarterly. So far in the last earning date, they surprised analysts and beat earnings expectations by 15.32%, with earnings not being as worse as analysts expected. They expected a earnings of negative $1.11, and they actually had an earnings of negative 0.94 cents. That's for the period ending 8/2017. That's 8 as in the month 2017. Definitely do check out these income plays. Again, the first ticker symbol is CLM, the second one is BPT, and the third one is FTR. These are definitely some stocks that you should definitely consider taking a look into if you are a income investor. Definitely is something for you to check out. Let's talk about Bitcoin. Now, Bitcoin, isn't that a interesting chart? We're going to pull that up right there, as you can see, the Bitcoin chart. Bitcoin, well, what else we got to say about Bitcoin? They're doing quite a crazy amount of things here. Bitcoin is currently trading at, well, on the Coinbase exchange, it is having some serious difficulty breaking through the 11,000 barrier, trading at $10,991 on the Coinbase exchange. Coinbase and with the Bitcoin US dollar pair is up 2.09% from the previous day's close. And although there's some problems that you do see with some of these exchanges, particularly with Coinbase, today I am lucky enough to have with me a professional trader for cryptocurrencies who traded for a European trading group out in the UK, and we're going to discuss some topics relating to Bitcoin and the cryptocurrency exchanges associated with them, particularly Coinbase. Today we have Dominic Romano. Dominic, how are you doing today?
Adam, how are you?
I'm doing well. There's some opportunities out here. People are talking about Bitcoin, more particularly the Coinbase market and the problems with the Coinbase exchange. Before I even dive into it, I mean, have you ever had any problems with the Coinbase exchange platform in the past?
No, but the problem that everybody's seeing now, more so than ever, is because of the heightened attention toward Bitcoin at this point. There's actually more people jumping into it than most of these exchanges can handle. For example, you have Binance, which suspended their registrations for a period of time, and they opened it up for a window of an hour, and within an hour period, they received somewhere along the lines of 400,000 new applicants. So, you're talking about a huge amount of volume of people jumping in. And so with that, you also have the element of, you have rogue employees in Coinbase right now, which, have made their rollouts for additional currencies such as Bitcoin Cash far more complicated than it needed to be. Unfortunately, with this being a newer market, for the most part, at least to most people, there's a lot of people in it that aren't fully playing by the rules. With it being an SEC, in most cases, companies like Coinbase and companies like Gemini, they all have to follow SEC regulations.
Yeah.
Just because of the fact that they have to get registered, they have to follow FinCEN regulations. So they have to follow all your standard, money business
transmitter compliance,
protocols,
yep.
and all the compliance protocols. So when you have, in the case of Coinbase, when they released Bitcoin Cash, there was immediately signs of manipulation going on with the pricing. So, you then couple that in with the fact that, when these markets start moving very volatilely in these crazy swing moments where it's either going up or going down really quick, they have these intermittent service issues where it actually affects the pricing, and it really leads a lot of people to believe that these things are being done on purpose, which we haven't seen enough proof yet to really support that either which way, but there are concerns, and I see a lot of people that are gearing up for lawsuits
and
just because of losing money and all of it.
So, I mean, like, the reason why listen, high volume of business shouldn't be a problem. It should be actually a good problem for business, and I don't know why Coinbase can't handle it. Now, you look at Fidelity, you look at E-Trade, if they're able to take on hundreds of thousands of new clients a day, get them through the anti-money laundering compliance and the know your client compliance, all within seconds, and you could have your account funded. The wire goes through, and your account is credited in less than 30 minutes. And these are
far easier. You have far easier compliance regulations with your conventional banking and your conventional financing firms, and your conventional brokerage houses. With cryptocurrencies being an emergent technology, really in the last 6 months it's been emerging mainstream. There's been massive pushes to do whatever can be done to regulate it. So ultimately, there's a far higher risk for exchanges to really know their customer, which is part of FinCEN regulations and compliance standards. So there's a lot of risk for them to take these new clients in. So there's a lot of due diligence that goes on. And most of these exchanges don't even have the manpower to be able to sustain the amount of growth that they're seeing. So we're seeing companies like Coinbase, for example, that are hiring hundreds of new employees a month and a week even to try to sustain the growth that they're seeing, because it was just unforeseen that at the moment that it happened, this took off in the level that it did.
I don't think anybody could have expected, that type of explosion in value for Coinbase. I mean, if you did see that happen, or foresee that, you got to be a wizard of some sort. But let's talk about, for example, Dom. I want to thank you for giving me some of that feedback. But I'm actually kind of frustrated with Coinbase. I'm actually in the middle of serving them legal documents, subpoenaing them, and for holding my money and never crediting my account, having customer service never reaching out to me. I mean, let's put yourself in, a small retail trader's shoes. If you wire $10,000, to Coinbase and your account, isn't funded in a sufficient amount of time, hell, even 3 days, you're kind of freaking out. Imagine if you have 100,000 or 1 million and they're just holding it hostage. It kind of makes me wonder and think to myself, are they using my funds to pay off other people who are trying to withdraw money out of their account? And kind of goes to wonder, is it a Ponzi scheme? Look at Mt. Gox. Mt. Gox encountered, everybody saw the true colors in Mt. Gox's exchange when everybody was, basically doing a bank run, or everybody wanted to run out and, sell. And they couldn't meet all these requirements. And and not saying that's what caused Mt. Gox to fail. Mt. Gox failed way before that happened, but that was the catalyst that brought that organization down and exposed it. And I think that there's something happening with Coinbase. I have strong reason to believe that there is something happening, because even if you are a small organization, you could reverse a wire. You can have your bank automatically, not accept wires, reverse wires if they're not from a pre-selected list. So that goes to wonder why they're not doing those types of protocols. Why are they just, accepting money, having it in their account, their operational account nonetheless? And for those who don't know, they use a Metropolitan Bank in New York City. So, I'm also going to be bringing Metropolitan Bank of New York City to a lawsuit as well, for not, communicating communicating with all the parties of interest, not crediting my account, not reversing the wire, holding my money hostage. I mean, there are damages, significant damages that people can be claiming for. If you wire, $10,000 to Coinbase and they don't fund your account, say 30, 60, 90 days go by, you're out 10 grand. You can't pay your rent. You can't invest your money. You could have invested it elsewhere. And, right now, I mean, this is not a new topic, but but many people on Reddit particularly are very interested in seeing a class action lawsuit for Coinbase happening. Now, I would totally support the lawsuit in any way I could. But at the same time, I'm just trying to get my money from Coinbase. Even though it's not $1 million, it's still something of value, and I'm actually surprised to see that I'm not the only one who's having problems here.
Yeah, a lot of people are having issues with it, but that's across the board. We're seeing that a lot now. We just saw BitConnect got taken down about 2 weeks ago now.
3 days.
So they're another one that was engaged in what was almost obviously a Ponzi, and they got taken down finally. So we're seeing more of it. As the market continues to grow, we're going to continue to see some bad actors in the industry arise and then ultimately fall, because it's either going to be where the supply and demand naturally weeds those people out, or law enforcement will step in and ultimately remove those bad actors.
And hopefully that does happen. I mean, on an organizational scale of Coinbase's size, I would imagine it being pretty, not the hardest thing in the world to get away with. I mean, if they could process orders, why can't they process a Ponzi scheme? I mean, it's just an accounting formula on their end. If they could hold X amount of money for so long of time, they can make it go in there. They can make it happen. Bernie Madoff had a Ponzi scheme running for a very long time, and nobody knew until the recession came around. And nobody even thought about Bernie having a Ponzi scheme, because he had a good fund, he had a good reputation. Coinbase has a good reputation, and they have good people on their team. They've been around, and I've used them as a business to pay people in the past when it wasn't really flooded with market participants. But I just want to end it on this for all of our listeners that are listening right now and experiencing some sort of problem with Coinbase. Don't be afraid to take them to court. As a saying I like to say to people that I advise and consult, you could sue anyone at any time for any reason. So bring them to court. You have their information. Why not do it? Dom, what do you think about bringing them to court? Do you think that's going to accomplish anything?
Well, I think that, especially with the movements of class action lawsuits, ultimately that pressures change onto a company. Most companies don't want to litigate for years over a class action lawsuit, especially not companies that need the cash flow available right now to be able to expand their business, to sustain the rate of growth that many crypto exchanges are seeing today. I think that one of the bigger issues, along with a lot of the technical issues which users are seeing, one of the bigger issues is how they actually integrate into the network for handling Bitcoin transactions. If you actually look at the charts, which show the network utilization for Bitcoin, they are congesting the Bitcoin network to the point of where...
What do you mean by that?
Because of the fact that they haven't really taken proper development protocol steps in integrating into the Bitcoin blockchain and facilitating transactions. What's ultimately happening is they're congesting the network far more than they need to be, and it's causing transaction fees to be way higher than they need to be, and it's actually causing transaction times to be way higher than they need to be. And you could see in the moments where Coinbase has an outage or a pause in trading or anything relating to a freeze for even if it's 30 minutes, if you look at the overall charts of the Bitcoin utilization, the Bitcoin network's utilization, it will drop dramatically when you eliminate Coinbase from the equation.
I think that they're honestly creating an opportunity for other small-time exchanges to selectively choose, who they want to be in their exchange, and I think that Coinbase is going to be replaced at some point. This is an opportunity for somebody to step in, But again, there's some problems here that as an investment product, it's good if there is liquidity, but as an investor, I would be investing on the liquidity side. Again, if you guys are having any problems with Coinbase, I suggest you check out the subreddit, reddit.com/r/Coinbase, for much more information. They're actually, you can actually see some of the Coinbase representatives reaching out to people on Reddit, on this subreddit, with their case information and speaking to people. This is honestly amazing that I stumbled upon this, and they're communicating with people. This gentleman named Drew is helping people out from Coinbase, but who knows if he actually is an individual from Coinbase itself. So, there's a lot of skepticism, and there's some people who have spent 20 hours on the phone with them. It's just disgusting when I think of it. I just rather put my money into something that has a much better store of value than what we're currently seeing with Bitcoin. I think Bitcoin's going to be around for a while. I think that goes without saying. People want to be able to pay quicker, and Bitcoin kind of allows that. They're trying to be a store of value, but I still see gold kind of being a better store of value than Bitcoin.
Well, what I would have to say to that is, unfortunately, we can't fully take all of the issues with Coinbase and equate that to the entire cryptocurrency industry at the moment. I think it's important to delineate the difference between what one exchange offers and what the overall technology offers. So yeah, if you're actually interested in buying cryptocurrency and holding it on an exchange is not the smartest or brightest idea. You're better off holding it on a cold wallet, on cold storage, or at least get it on a software wallet. So,
like Nano Ledger or the Trevor wallet, both are good. Honestly, in my opinion, I think the Trevor wallet has a better accounting platform than the Nano. But continue, Dom. What were you saying?
so you don't want to keep it on an exchange anyway. You really want to keep it off of an exchange to avoid any of those issues. The more you have on an exchange, the more you're holding a risk for a single point of failure and exposing yourself to a hack. So keeping it off an exchange is a brilliant idea. But then you also have to factor in, when we're looking at the utilization of cryptocurrencies today, it is changing the world quicker than we can even quantify the changes that are taking place. If you look at places like in countries and nations in Africa, where they don't actually have a monetary foundation, they don't have a monetary structure in many of these places where that is stable enough to sustain utilization by their citizens. So, in many countries, their citizens come up with currencies that are almost like barter currencies, and ultimately that ends up making up the majority of the GDP for their country at one point or another.
Yep.
What's happening now is Bitcoin is actually becoming extremely popular in these countries where individuals and people have been cut off from the entire banking world, and this is shining a light in those areas which, for up until now, pretty much had zero access to the rest of the world financially and economically. And this is as far-reaching as any of the deepest jungles in the rainforests.
How about Guyana?
This is as far-reaching as any of that. It's as far-reaching as some of the most remote desert locations in the world. Anywhere in the world where there are people that have technology and have the ability to access the internet, they will be able to transact with cryptocurrencies.
Dominic Romano, thank you for coming on the show and really sharing your input with us today. Really do appreciate it, Dom. Thank you.
You're welcome. And by the way, great show. Congratulations on your first episode.
Really do appreciate it. Thank you, Dom. And next, the topic we're going to get into, guys, is gold futures, about how they're trading higher today. Let's pull up a gold chart, and gold currently is the futures on gold right now. Let's pull it up. Gold futures. Gold futures currently trading at $1,341 per troy ounce. I still see gold being a very good store of value for your assets, but at the same time, it looks like gold's run-up is slowly running out of steam and may go lower in the short to intermediate term. I can see that happening. Although it's a good time to buy gold and put gold into your portfolio, whether you have it in gold bullion, coins, bars, even jewelry. And this is why, and this brings me to the next point, why I'm mentioning gold in this episode, is because when you have these physical, collateral, tangible assets that are looked at as a store of value and people look at as valuable assets, you could get loans against them. You could actually get loans against them relatively easy. And you could go to your regular old mill pawnbroker and get a pawn loan on a bar of gold. And they would generally charge you interest rates from anywhere from, 1 to 4% a month in New York, depending on how much gold you have and how big of the loan size it is. And considering that, having some gold in your portfolio, I think is always a good bet, because you never know when you're going to need that that emergency short-term loan to settle some sort of cash flow conflict that can't be solved using traditional financing means, like, your unsecured line of credit or credit line or a credit card. Say all those things get shut down, you could still use gold and get a collateral loan against it, whether you're using the loan for 1 day or 1 month. Some firms, some pawnbrokers, give you pro rata interest rate charges that are accrued daily, and that's relatively fair. And you get your gold bar back upon the maturity of the loan, and you pay back the principal of the loan plus the interest all in full, one big balloon payment upon maturity for the loan, and you get your gold bar back, which is really the great part, because a lot of people forget that these are precious metals, and precious metals including gold, silver, platinum, palladium, rhodium. Yeah, I said rhodium, people. RHODIUM. Surprising enough, in the scrap metal industry, rhodium used to be on these scrap metal yards' balance sheets, and at one point it turned into a bubble when one accountant realized that this rhodium is a precious metal asset, and that its value has increased enormously over the period of time, whether it was a year or 2 year, due to supply and demand for rhodium and the market needs for it. So these scrap yards that had stockpiles of rhodium scrap, which is a precious metal, they on looking at their financials, they really looked like they were performing very, very well. But when you took the rhodium out of the picture, really showed you the true image of what was going on, and it was that rhodium was experiencing a bubble, and that it didn't really show the clear value of what the firm had. Now, some of the smart firms, smart scrap yards back in the day, sold out of their rhodium positions, and accounted for it differently on their financial statements, so that they could find out what the true value of their scrap yards industrial metals are. And that's really, they even have palladium in these scrap yards. It comes from the catalytic converters inside of it, the material inside of the honeycomb of the cat, that powder. There's palladium, there's platinum, and trace amounts of rhodium in these automotive parts. So yeah, gold futures are important to look at. Precious metals are relevant to look at. Even finding out what 1 carat VVS diamond is worth, and finding out what the cash liquidation value of that is worth, and what you could get a loan against it is worth, is very important. And the construction and design of your portfolio. So as we see the dollar strength, which seems to be weakening, as seen in U.S. dollar futures, it may be a good time over the course of 2, 3, 4 years to be picking up positions of actual physical gold. And I know what some of you are saying to yourself right now, Adam, you're crazy. Why would I want to buy, silver bars, gold bars, even 1 troy ounce or 1 gram, and buying and accumulating a position, every single month from, some highly reputable bullion dealers like Apex Metals. Apex Metals is a great firm. I've used them to buy silver bullion. The most I bought from them was 1 kilogram silver bar, and what I remembered was that it was so easy to sell that silver bar when I needed cash. I literally went to my good friend who owns one of the top jewelry firms, jewelry shops in New York. This is Benny NY. You can find them on bennyny.com. I think that's their URL. Let's just double check. Yeah, that Benny's Jewelry NY.com. That's basically the person who I sold my silver bar to, and I got cash for it, which was great because I needed cash at the time, and those silver bars that I was accumulating every single month, I was able to have some sort of store of value available, and when I needed cash, I was able to go and sell it, a little bit below spot price. Generally, the more precious metals you have, the better rate and better markdown you get for the spot price. But you're looking at around 2 to 4% below spot to get cash for your bullion. So yeah, gold is still the best store of value available, in my opinion. Compared to everything else. I mean, it's physical. And if you're afraid of somebody coming into your house and taking all your gold from under your mattress, well, first of all, you probably shouldn't have gold on your mattress, number one. And number two, it'd probably be a good idea to get a safety deposit box at your local bank and insure that safety deposit box up to the value of that gold bar. So, you could get around $50,000 of safety deposit box insurance that protects against theft, water damage, basically a whole host of risks associated with owning gold physical bars. And pay a annual premium of $50, which gives you $50,000 of insurance coverage for your physical gold that you have slowly stockpiling in a safety deposit box in a bank. Why can't you do that? There's no reason why everyone and anyone who invests to start building some sort of precious metals portfolio at their bank. I mean, if you have a savings account, doesn't it make sense to also have some sort of precious metals savings account as well? I mean, it's a store of value. Now, when you get to be a big time, investor and you have more cash, and now when you put $1 million into gold and you put it into, a vault and you have it insured, you may want to consider hedging using future contracts for that physical gold position that you have. It's honestly up to you for the reporting requirements based on what your jurisdiction is to report that physical gold supply that you have. But, let's just give you an example. If you were an individual that, was not really ethical in regards to, tax laws in the United States, and you didn't report that you had, like 1 metric ton of, 1 metric ton of gold bars, and then you have this, futures account where every day, you're losing money because you're going short against gold, and gold keeps going up. From the first side of it, it's gonna look like, oh, you're just a bad futures trader. You don't know what you're doing. But I think over time that when you it will make you look like a bad futures trader for trading gold, but in the reality of it, those losses which you accrued hedging gold using futures can be used to write off some of the gains that you would have in the future for selling out of that gold position. So yes, it is. Yes and no. You got to check your jurisdiction's disclosure requirements for physical gold bars. But again, gold still the best store of value, especially with the dollar strength seems to be weakening, as seen in U.S. dollar futures. If you look at the daily chart, it really tells a good story there. And also, again, I'm going to mention one more time that it is a good time to buy jewelry that has gold in it. Just to put that, out there, that it is a good time. And I don't know if, that these precious metal prices can really get any cheaper. As for some major news that, about Trump's tariffs on U.S. imports, and what are these import tariffs that Trump is imposing? What is it doing to the markets? Well, let me just give you the laydown. President Trump's move to crack down on what he sees as quote-unquote unfair competition to U.S. firms was reverberated around the world as investors assessed the relative impacts on companies hit by tariffs on solar panels and washing machines. So if you're a beneficiary of First Solar, you have seen a huge gain in your stock holding, more than 6% in after-hours trading, on Monday this morning. So in Seoul, a washing machine maker company, LG Electronics Incorporated, I'm sure you know them, they tumbled more than 5% within the first 15 minutes of trading. That's before reversing losses to closing higher. And Samsung Electronics, which also counts those appliances among its many products, it shrugged off the news from the start and closed with a 1.9% advance higher. So these and I'm going to quote the head of research at United Overseas Bank Limited in Singapore, Suan Tek Kin. Solar panels and washing machines may be not so damaging. Quote, that's why the markets aren't reacting in a very negative way. From the U.S. point of view, they probably want to send a message. Get to the table, let's negotiate, rather than really punish these producers. So if you were to check out LG, they have taken a hit. Quote, probably the most important part of that message is that the U.S. administration still has protectionism at the top of its priorities. So the U.S. will impose these new duties of as much as 30% on foreign-made solar equipment and as high as 50% on imported washing machines, according to U.S. trade representatives from the U.S. Trade Representative Office said on Monday today. Now, this allowed companies to react, and they reacted quickly. This decision actually meant that everyone will pay more. And Samsung clearly said this on their website. But, there are fears of a revival of a Trump-China trade war, which has already been flared. But you could already see that there's some sort of solar panel rally right now in the after hours right now. More than 80% of U.S. solar installations are imported panels. And that's according to data provided by Bloomberg. And the majority of these come from Asia. So China and South Korea condemned the steps, with the Ministry of Commerce in Beijing calling them a misuse of trade measures. The solar tariffs are lower than the 35% the U.S. International Trade Commission recommended in October, after finding that imported panels are actually harming American manufacturers. So it seems like President Trump does have our back here. He is holding to his promise of bringing back U.S. business, fighting off our trade wars with, other countries, more particularly, the Trump and China trade war, which honestly, I don't know if that could result in, positive results as what everybody else expects to happen. The next month will be crucial in signaling whether, U.S. President Trump, U.S. President Donald Trump's threats to get tough on China over trade turn from rhetoric into reality. So this is a year into Trump's presidency, and Trump has failed to stem growth in China's trade surplus as an economic upswing in the U.S. Fuels imports from the world's factory floor. So the clock is really ticking on a decision whether to impose new tariffs on also steel imports, while initial reports on aluminum and solar panels are due this week. So China is going to be looking at all these things. I mean, they have flagged all necessary measures, which should, if a trade war were to unfold, which is, they're trying to make that case. In a telephone call last week that was with President Trump and President Xi Jinping, they highlighted that positive changes in getting North Korea to resume negotiations over its nuclear weapons program, and urged a constructive approach to resolving disputes and opening up the other's markets. The possibility is what we feared last year happens this year. Outside of the geopolitical sphere, trade-related fears are probably the biggest external risk we face, since the whole cycle in Asia is currently still very export-oriented. This is a very big news topic that has been on today, but I won't drown today's live stream. I'm so used to doing these podcasts, but now I'm doing live streams. This was a major news report. It's something that you definitely should read into more about what is going on. How could you capitalize off this? There's some investors that are saying that the international emerging growth funds and emerging market funds and the MSCI index are, all signaling signs that, emerging markets are going to go higher. And this is something to take a look at. I mean, if you want to capitalize off of this news, you definitely have to understand more in depth how this tariff is going to affect businesses. First Solar, FSLR, it popped up in value when Obama was in office due to all the legislation that Obama passed for clean energy, or green energy. We'll see if that actually works out. But I'm going to finish this broadcast today with 3 types of brokers and their best uses, all of which I have used and I have my personal experience with using. I am not getting paid from any of these brokers to talk about them. I'm just giving you my own experience. So the first one I have on my list is Fidelity Investments. This is honestly the best type of financial account for any type of reporting that Fidelity is honestly the best for any type of account, whether it's business, individual, retirement, that require meticulous reporting. I mean, they'll even send you a letter in the mail for a transaction confirmation to confirm recent transactions on your account. So if there were, money removed from your Fidelity account and deposited into another account, they're going to send you a letter in the mail. In addition to the email they send you, and in addition to the notification you get in your dashboard. So I like that, what Fidelity Investments does, and the paperwork that they send out, the reporting that they offer. It really allows, whether you're a business or a trading club or an individual account or a trust, it really allows you to be that much more transparent in what you are doing. $4.95 trades is a low commission for all of the high-level services that you get. Just customer service, always available. You get tons of features for your account, like debit cards and checkbooks, and that's just to name a few. I mean, you can have bill pay on it as well. You pay your bills. Fidelity is really good. I highly recommend it for setting up business accounts. If you deposit $2,500, you get a gold debit card, which is I believe a Visa card, and you also get checks in your business name. Unlimited checks. They're not going to charge you for checks, or if you need any more checks in the future, they're never going to charge you. Wire transfers are $10. I mean, you really can't beat that, and it's really easy to set up an account with them. Fidelity, I put on the top of my list of being one of the top brokers out there. I mean, $4.95 is how they're making money on their trades, and they charge a little bit higher than normal margin interest rate. But if you're looking to trade with margin rather than using like leveraged products like QLD, then another type of brokerage would be best suited for you. So that Fidelity is definitely great. The second brokerage to talk about is Robinhood. Now, this, in my opinion, is best for the small-time retail trader. Now, Robinhood's big drawback is that it has a few, actually. Is that number one, it only has a mobile application. I can't access it on my desktop or through a web browser. I could only use the application. On my iPad, I can't download the iOS app to manage my portfolio, so that's kind of annoying. But Robinhood is best for the small-time retail trader. If you have an account that's less than 25 grand, you can use Robinhood with pretty nice results. I mean, they don't charge trade commissions, but I would assume that they are making money through the markup and markdown of when you're buying and selling securities, and that's why they don't charge a commission. It's priced into your buying and selling price. Robinhood is actually offering option trading and more products to their offering in the next coming months. So that's something to keep track of. I honestly am very interested to see how Robinhood's platform performs for option trading, because it'd be great if there's no trade commission for trading options if they were to price it into the option contract. I'm a person who likes to take risk in small small portions. So it'd be nice to put $1,000 into some weekly options on QQQ, and have Robinhood facilitate the trade for me. It'd be interesting to see how that plays out, because I do like and enjoy trading options, although sometimes the cost does get in the way, like trading fees. And lastly, interactive brokers. This is best for larger sized accounts from 250 grand and up, although you can open up an account with as little as, I believe, $5,000 to $10,000. Great for hedge funds and sophisticated investors that require global access to all types of investments, and they offer the lowest commissions in the industry. So if you're a professional investor, if you're very sophisticated or have a high level of understanding of investing, I highly recommend going to Interactive Brokers and opening up an account with them. Even for the hedge fund side of the business, using Interactive Brokers to manage your fund. When I had my hedge fund, it was very easy to set up and manage, and they assigned a compliance account executive to your hedge fund, so that you had a very seamless integration and setup to Interactive Brokers. And once you were set up and all the paperwork has been sent to them and stuff, you basically are ready to go and invest. And they charge a flat fee commission of, I think it's around $2 minimum per order, but read up on their website about their commissions for detailed info, because they do have one of the lowest margin borrowing interest rates and one of the lowest trading commissions that I've ever seen. And I would consider myself a very sophisticated trader, and that using interactive brokers is great for option traders, whether you're trading a sophisticated credit spread or iron condor, or doing some international funds or cross currency transactions or forex. Interactive brokers is a great place to manage your assets. And they also have a marketplace where you could find fund administrators, accountants, other hedge funds that are offering investments. So, like, in addition to the regular, run-of-the-mill offerings of financial products that interactive brokers will offer, they also got their alternative investments, which are made available through their interactive brokers marketplace. You can find money managers, fund managers, a whole wealth of diversified investment products are available through interactive brokers. So if you got the capital, if you're a sophisticated investor and you require more access to more types of investments, and you really want the most competitive level of commissions, then interactive brokers is really the best place to go. And once you grow out of interactive brokers, well, then I don't know where to go from there, but I would suggest you call up some of the big prime brokers like Goldman Sachs, Merrill Lynch, Morgan Stanley, all these Bank of America, all these big prime brokers can then help you at that stage if you do grow out of interactive brokers. But I do want to end this this broadcast on that. The tariff on Trump, I think it's going to be a great thing for U.S. markets. It's going to bring us even higher. That the Bitcoin price, it's continuing to go down, which is great, but not great for people who are actually holding on to it. Currently, Bitcoin on the Coinbase exchange it broke through 10,000. It's at $11,045 right now. So it's moving past the 10,000 spot, and it's moving a little bit higher, although it's nowhere near close to its near $20,000 high. Recapping QLD, highly recommend checking it out. Whether you buy QLD in your Robinhood account, QLD, or your other brokerage account, QLD is something great whether you're buying and holding and you want some broad exposure to the NASDAQ or the U.S. markets in general. You want broad exposure to the U.S. market. Use QLD. I mean, it's leveraged 2 times, but you get great exposure at a good cost. And it's only trading at $86.64, and I would not be surprised by summertime it's trading at, in the hundreds. So I'm going to end it on that. QLD currently trading at $86.64, up 1.63% from the previous day's close. So check out QLD if you do want to get that broad market exposure, and please subscribe to this YouTube channel. This is A.S, the Generalist. We have a live stream closing bell special every day at 4 p.m. Eastern to around 5 p.m. Eastern Standard Time, Monday through Friday, during normal U.S. market trading hours when the closing bell does occur. So 4 p.m. Eastern, you can expect our live stream to be up and running. This is episode 1, and we'd like to thank everyone who did tune in for this broadcast. Thank you for tuning in. This is Adam Shallett, your host for today's broadcast, and I would like to thank you for tuning in. This is Adam Shallett, and have a great day, everyone.